What if I told you that your savings are shrinking every single day without you even spending a dime? Sounds crazy, right? But that's exactly what's happening thanks to inflation. Inflation is like a sneaky thief, silently eroding the value of your hard-earned money over time. Think about it. Have you noticed that groceries cost more, gas prices keep rising, and homes are getting ridiculously expensive? That's inflation at work, slowly but surely making everything more expensive while your money stays the same. Now, here's the real kicker. Keeping your money in a savings account might feel safe, but in reality, it's not enough. Traditional savings accounts offer interest rates that don't even come close to beating inflation. This means that every single year, your savings are losing purchasing power without you even realizing it. But here's the good news. There are ways to fight back. If you understand inflation and use the right strategies, you can protect and even grow your wealth. So in this video, we're breaking it all down: how inflation works, why it's a serious threat to your savings, and most importantly, how you can safeguard your money and build real financial security. Stick around, because by the end of this video, you'll have a bulletproof plan to make inflation work for you, not against you. Understanding inflation. Inflation. It's a word we hear all the time, but what does it actually mean? At its core, inflation is the gradual increase in the prices of goods and services over time. This means that the money you have today will buy less in the future. It's why a gallon of milk that cost $1 in the 1970s now costs around $4. The same money, but less buying power. So what causes inflation? It typically happens for three main reasons. 1. Demand pull inflation. This occurs when demand for goods and services outpaces supply. When everyone wants to buy the same thing, whether it's houses, cars, or concert tickets, prices go up. 2. Cost push inflation. This happens when the cost of production increases. If raw materials like oil or wheat become more expensive, businesses pass those costs on to consumers, making everything pricier. 3. Monetary inflation. This is when too much money is printed and pumped into the economy. When there's more money chasing the same amount of goods, prices naturally rise. Now, you might be thinking, well, isn't a little inflation normal? And yes, moderate inflation is actually healthy for the economy. It encourages spending, investing, and economic growth. But too much inflation is dangerous, and that's what we've been seeing in recent years. For example, think about the price of gas. In just a few years, we've seen wild fluctuations, from $2 per gallon to over $5 in some places. That's inflation in action. And it's not just gas. The average price of a home in 2000 was $165,000. Today, it's nearly $400,000. That means if you're saving up to buy a home, but your money is just sitting in a bank account earning less than 1% interest, you're actually losing money in terms of purchasing power. The Federal Reserve, which controls monetary policy in the US, tries to keep inflation under control by adjusting interest rates. But let's be honest, governments don't always get it right. Sometimes their policies cause even bigger problems, leading to economic instability or even recessions. The real question is, what can you do to protect your money? If inflation is constantly eating away at your savings, then you need strategies that outpace inflation. And that's exactly what we'll talk about next. The silent killer: how inflation erodes savings. Here's a shocking truth: your savings are not as safe as you think. In fact, if you're keeping all your money in a traditional savings account, you might be losing wealth every single year. Let's break it down. Most savings accounts today offer interest rates below 1%. But inflation, it averages around 2 to 3% per year, and in recent years it's been much higher. This means that while your bank balance might look the same, its actual buying power is shrinking. Let's say you have $10,000 in a savings account. If inflation is 3% per year, in 10 years, that money will only be worth about $7,400 in today's dollars. You didn't spend a dime, yet your money lost nearly a quarter of its value. And here's the worst part. This effect compounds over time. Think about retirees who save their whole lives, expecting their money to last. If their savings aren't growing at a rate higher than inflation, they'll have less and less purchasing power each year. That's why some retirees run out of money faster than expected. Many people think that as long as their bank balance isn't changing, their wealth is stable. But that's an illusion. Example, if you saved $100,000 20 years ago and never touched it, you might feel secure. But in reality, that $100,000 in the year 2000 had the same buying power as about $180,000 today. So even though your money didn't shrink, its ability to buy goods and services got cut nearly in half. That's the power of inflation. It doesn't take your money away, but it makes it worth less. Why playing it safe is risky. Some people avoid investing because they fear market risks. But not investing is actually riskier. If your money is sitting idle while inflation is running wild, you're essentially guaranteeing a loss of value. Let's put it another way. If your savings grow at 1% per year, but inflation is at 4%, you're actually losing 3% of your wealth every year. In 20 years, that's a huge difference. That's why it's so important to beat inflation, not just keep up with it. So what's the solution? You need inflation-proof strategies, ways to grow your money at a rate higher than inflation. And that's exactly what we'll cover in the next section. Best strategies to protect your wealth. By now, you understand that inflation is constantly eroding your savings. So what's the solution? The key is to invest in assets that grow faster than inflation. Here are the best strategies to make sure your money is working for you instead of against you. 1. Invest in the stock market. The stock market has historically outperformed inflation over the long run. While inflation averages around 2 to 3% per year, the S&P 500 has delivered an average annual return of around 8 to 10%. Why does this happen? Companies raise prices over time to keep up with inflation, and as businesses grow, their stock prices increase. If you had invested $1,000 in the S&P 500 in 1990, that investment would be worth over $20,000 today. Compare that to simply keeping $1,000 in a savings account, which would have lost value due to inflation. A great way to invest in stocks without stress is through index funds. These funds track the performance of the entire market, giving you exposure to a wide range of companies while reducing risk. 2. Real estate, a powerful inflation hedge. Real estate is one of the best long-term investments because property values tend to rise with inflation. When prices go up, so does the value of real estate. Not only does your property appreciate in value, but if you own rental properties, you can raise rents over time to keep up with inflation. This means your income grows rather than being eroded by rising costs. Even if you're not ready to buy physical property, you can invest in real estate investment trusts, REITs. These are companies that own income-generating properties, and they pay dividends to investors. It's a great way to benefit from real estate without having to be a landlord. 3. Gold and precious metals, the classic inflation hedge. Gold has been used for centuries as a way to protect wealth. When inflation rises, investors often rush to gold, driving its price higher. For example, in the 1970s, when inflation was at its highest, gold prices skyrocketed by over 500%. While gold doesn't generate income like stocks or real estate, it's a solid store of value when paper money loses its purchasing power. Other precious metals like silver and platinum also tend to perform well in inflationary periods. 4. Cryptocurrencies, the new hedge against inflation. Bitcoin and other cryptocurrencies have gained popularity as an alternative inflation hedge. The idea? Unlike traditional currencies, Bitcoin has a fixed supply of 21 million coins, meaning governments can't print more of it like they do with money. While crypto is highly volatile, many investors believe it's a good way to protect wealth in the long run. In fact, during some periods of high inflation, Bitcoin has performed even better than gold, making it an interesting option for those willing to take on some risk. 5. Dividend stocks earn passive income. Dividend-paying stocks allow you to earn money while you sleep. These companies pay out a portion of their profits to shareholders, which can provide a steady income stream that rises with inflation. For example, companies like Coca-Cola and Johnson & Johnson have increased their dividends for decades, meaning investors are earning more money every year. Dividend income can be reinvested to buy even more shares, compounding your wealth over time. 6. Treasury inflation-protected securities. If you're looking for a low-risk way to combat inflation, consider TIPS. These government bonds are designed to rise in value as inflation increases. While the returns aren't as high as stocks or real estate, they provide a safe way to preserve wealth. Another option is I-bonds, which are U.S. savings bonds specifically designed to adjust with inflation. Unlike regular bonds, they ensure your purchasing power stays intact. 7. Commodities, investing in essential resources. Commodities like oil, natural gas, and agricultural products tend to increase in price when inflation is high. When production costs rise, companies pass those costs on to consumers, making commodities a profitable investment during inflationary periods. You can invest in commodities through exchange-traded funds, ETFs, that track prices of oil, wheat, or metals. This way, you don't have to physically store barrels of oil in your backyard. 8. Diversification is key. No single investment is foolproof, which is why diversification is crucial. A good strategy is to spread your money across multiple assets, including stocks, real estate, gold, and even alternative investments like crypto. The goal? Maximize growth while minimizing risk. For example, if inflation spikes and stocks drop, real estate and commodities might rise, balancing out your portfolio. This way, your wealth isn't dependent on a single asset class. Taking action now. Inflation is here to stay, but by using the right strategies, you can protect and grow your wealth instead of watching it shrink. The key is to start now. The longer you wait, the more inflation eats away at your savings. So here's your challenge. Review your savings strategy and see if your money is keeping up with inflation. Consider investing in assets that grow over time. Stocks, real estate, commodities, or dividend-paying stocks. Diversify so your wealth isn't tied to one type of investment. The biggest risk is doing nothing. If you want to secure your financial future, start making smart money moves today. Now, let's wrap up with some final thoughts on taking action right now. So, what can you do right now to protect your savings from inflation? Here's a quick action plan. 1. Stop relying on low-interest savings accounts. Keeping money in the bank is fine for emergencies, but long-term savings need to grow. 2. Invest in assets that outpace inflation. Stocks, real estate, commodities, and even crypto can help preserve and grow your wealth over time. 3. Diversify your investments. Don't put all your money into one asset. Spread it across different investments to reduce risk and maximize potential growth. 4. Consider passive income options. Dividend stocks, rental properties, and even side businesses can provide cash flow that keeps up with inflation. Stay informed. Inflation and financial markets are always changing. Staying educated and adapting your strategy gives you a long-term advantage. At the end of the day, inflation is inevitable, but losing wealth doesn't have to be. The sooner you take action, the stronger your financial future will be. If you found this video helpful, don't forget to like, subscribe to Raveling Money, and share. Let's help more people take control of their finances and preserve their wealth. Thanks for watching, and I'll see you in the next one.